Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is Richard Benuli. Today we have Dr. Marc Faber and Ira Harris. Dr. Faber is the editor and publisher of a widely read monthly investment newsletter, the Gloom, Boom, and Doom Report, which highlights unusual investment opportunities, and he's the author of several books. Ira is a hedge fund manager, a global trader in foreign currencies, bonds, commodities, and equities for over 40 years. He's also served as CME director for several years. Welcome, gentlemen.
Privilege to again sit. I think it was a year ago that we did our last one, and I think if we roll back that, people should pay attention to this one too.
Great. Thought we begin with a discussion on your views on the global economy challenges presented by the COVID virus crisis. Dr. Faber?
Well, I think that we had a downturn in the economy, obviously, everywhere in the world, with different intensities, depending on the sectors we're discussing or the economy under consideration. So as an example, the tourist industry got hit very hard. And if we look at society and we group society into high earning participants and low earners, and we look at different races and different age groups, we find that the wealthy people didn't suffer as much as the low income recipients and the low education achievers. And also among races, the blacks have suffered much more from the rising unemployment, structural unemployment, than, say, wealthy people and highly educated people. So there are different patterns. I think after April 2020, we had an economic recovery, but we have to analyze why did this economic recovery occurred. And when we take a closer look, we can see that obviously the economy has recovered, but amidst a huge increase in the fiscal deficit and amidst massive money printing as defined by an increase in the balance sheet of the central bank, of the Federal Reserve, of the ECB, the Bank of Japan, and so forth. And when we analyze that, then we can see that actually the economic recovery compared to the stimulus that was injected into the economy, in this context, the recovery is actually disappointing. And if you look at the employment ratio, in other words, the number of people employed as a percent of the population, it's still way below the peak level in 2019. So yes, there is optically a strong recovery at the present time, because we're comparing now today's situation in the economy compared to the low point in April, May 2020. But the question is, of course, how sustainable this is. It will be sustainable if we probably after a few months increase the stimulus and increase the money printing. And otherwise, if asset markets, which have driven part of the recovery, if asset markets stall, and asset markets today are very large, they are the bond market, the stock market, the crypto market, the precious metals market, the commodity markets, and so forth. If these markets stall, then obviously the economic recovery will slow down. And I think this is the observation that I have today. If I look at the performance of the treasury bond market in the last, say, 30 days, then I have to say that the bond market, in view of the strong economic figures that were reported, we don't know whether they are true or not, but this is what the government is saying. So let's assume there is a grain of truth. So compared to these strong economic statistics, what I want to say is that the bond market has actually acted quite well and is likely to move up here, not in the long run. I think we can assume that the bull market in bonds, which began in September 1981 and which lasted most likely until August 2000, that this bull market has ended and that we are now in a rising cycle of interest rates that will last probably 20, 30 years, who knows. But for the time being, near term, for the next, say, 6 weeks, 2 months, I think that treasury bond prices may rally, as well as precious metals, and be accompanied by renewed US dollar weakness. So that would be my general observation about the economy.
Interesting. And your thoughts, Ira, on the economy, the bond market?
Oh, I think Dr. Faber sets the table very well. And rather than reiterating, let me pick up and go, well, that would see, so we'll get a rally in the treasury market, a rally in the metals market, and weakness in the dollar. For a lot of people, the weakness in the dollar would fly in the face of the rally in the bond market. The metals market, yes, absolutely agree with it. So I want to dig into that deeper because I think that's worthy of a discussion. But we look at the world, and I'm going to raise this issue yet again because I haven't discussed it ever with Dr. Faber, but I look at the world and I listen to everybody talk about the inflation discussion, which I don't even want to get into. I think it's a nebulous discussion at this time because those who think we're going to have a lot of inflation will raise one issue, and those who think that it's a transitory effect due to lack of supply due to COVID, and once supply pick it up. But of course, I have an issue with that, is that it doesn't fit. The supply issue really doesn't fit because we've seen an enormous rally and actually Dr. Faber and I discussed this last year, so it's not a surprise to us, in global food prices. And the rally in global food prices is coming at the same time that we've seen record harvests from Brazil to the United States to Brazil. So there's plenty of, by historic measures, the harvests have been big, and yet we have soybean prices back at $15. We have wheat prices, as I'm looking, at $7.50, corn prices over $7. So we are seeing global food prices. And I would argue that it's more due to Chinese stockpiling. And why do I say that? Because I see where the yuan is at. And where so many analysts, the typical Wall Street knee-jerk idiot who says, well, the global economy has slowed down, look for the Chinese will look to weaken the yuan. Well, if we go from last May to this May, it has been anything but a weak yuan, while you've seen, I think, China stockpiling. So you're seeing China, I think, in a classic pivot away from just being an export-oriented economy to becoming more domestic consumption-based. So a stronger yuan fits that scenario. So that's where I want to take off from there. And with, to pick up further with Dr. Faber's view on rising bonds, rising metals, and a declining dollar.
Do you see that, Dr. Faber, in terms of China allowing their currency to get stronger for a focus on domestic consumption versus the old model of weak currency and exporting?
Well, to be fair to China, I don't think that they had a policy of weak currency. First of all, we had the 97-98 crisis in emerging economies that originated essentially in Thailand and in Russia. But at the time, most countries devalued their currencies very strongly, including South Korea and Taiwan and Singapore, and of course Indonesia, Thailand, and so forth. But the Chinese, they didn't weaken their currency at all. They kept it there, and it's been trading around that level since then, around the level of against the US dollar. So I don't think that this is an area where investors should accuse China of having kept or having pursued a policy of a weak yuan or a weak RMB against the US dollar. If you compare the RMB against the Russian ruble or against the Indian rupee or the Turkish lira, then it's been a stable currency. So I don't think there was a policy by China to weaken the currency. I think there's a policy of China to have strong exports, to be ready to meet the artificial demand coming from America. Because if you hand out money to people in America, it doesn't mean that they go and work. It actually means that a large portion of the population stays at home and does not want to work because they get more money by doing nothing than by working. So we have in America the unusual situation that actually the government, with their subsidies, is competing against the private sector. Restaurants that are now opening up, they have trouble finding staff because a lot of people prefer to stay home and get the benefits from the government. Over time, I suppose that it will change. But the point is that America, for the last 50 years or so, has pursued economic policies that boost consumption, but not capital investment and investments in education and so forth that increase productivity. And so if you look structurally, the US trade deficit has over long periods of time had a tendency to increase. And it's actually just now in the months of March reached a record. So the stimulus in America, stimulus increases the income of people. I agree. It increases the spending of people at Walmart and Amazon.com and so forth. But that spending doesn't mean that the goods are produced in the US. In fact, most of these goods that are bought at Walmart, they come from either China, Vietnam, Bangladesh, India, and European countries. So actually, for the economy itself, in measurement of industrial production and what is really produced in America, has done very little for the US economy. And that's why employment ratios have remained relatively low, despite of the recovery.
And do you also see China stockpiling commodities like copper and agricultural commodities?
Well, if you receive kind of war threats every day by the US in the one or the other form, and don't forget the trade war was announced by the US under the Trump administration 3 years ago. And if you're under that kind of pressure, then you better have some stockpiles. And this is precisely what China is doing in terms of accumulating oil reserves, gold reserves, and other commodities which they need for the industrial production. If no copper reaches China, and no silver, and no oil, and no wheat and corn, then there are shortages, and this would be disruptive to the Chinese society. So their reaction to the warmongers in the US, and believe me, in the US, there are plenty of them, although wars are usually completely useless and destructive for both participants. Uh, Despite of this, there are lots of warmongers who would like nothing better than a war with China. And under these conditions, that China takes some policy measures that are defensive is nothing unusual.
Interesting. And your thoughts, Ira?
Well, yeah, I'm in good company here, but with Dr. Faber, I would like to really actually walk back though. When I look at China, I always go back to January 1st of 1994. Of course, it was post Deng Xiaoping, but these were important times. But it was January 1st, 1994, when the Chinese devalued the yuan by 50%, which I believe helped create the tremendous economic crisis and stress points in 97, 98, because of course China built up all that capacity and was an active competitor. Well, their goods were certainly not to that level as they were in the other Asian tigers, but it certainly set the world on fire. And I think Dr. Faber's point about the warmongering is dead right on target. Although it was interesting to even hear Kurt Campbell walk back, and made the threat on Taiwan, because Richard, as you know, I've blogged about many times in the last 2-3 months for the Biden administration to cool the rhetoric, because they're not going to war over Taiwan. Will not happen. I thought we resolved that back in 71 when Zhou Enlai, had to teach Henry Kissinger about the reality of politics rather than the theoretical nature of politics. That the one China policy stood, and it would. So I didn't understand why they were ramping up the rhetoric, but they walked it back. And it's interesting that they walked it back. There was an interesting article on May 4th in Foreign Affairs talking about that the United States, even though the popular media were trying to sell it, that Suga had become fully simpatico with Biden. There was an article in Foreign Affairs by somebody who I know well, Tobias Harris, who happens to be my son, talking about that Japan wasn't walking away from China as fast as the popular narrative wanted to believe. And then we had yesterday, again, Kurt Campbell and even Anthony Blinken. They started walking away from that. If China does anything in Taiwan, we will be, no, it's going to be much more difficult. So I love that Dr. Faber refers to it as, of course, warmongering, because that's the way I see it. And he's sitting in Asia with a much better view, although history-wise, it's just not a good stance to take. Now, is that why they're stockpiling? I don't know, but it certainly is reflective. I mean, if you looked at the Bloomberg Commodity Index, and let alone the individual commodity prices, the stronger yuan is, and that's been the discussion raised by Michael Pettis for so many years, that if China was going to pivot more to a domestic-based economy, domestic consumption, they need to have the yuan strengthened. So it seems to go absolutely in sync. And now, is it going to be reflected in precious metals prices too? Because we know China has been a large buyer, and we haven't gotten to this yet, but the discussion about the People's Bank of China experiments with the central bank digital currencies. I'm of the belief that if China were to go to a digital currency, that it wanted to have acceptance, that it wanted to be accepted around the world, they would actually have to back it by some modicum of precious metals. Now, I know that that's conjecture, and I know, but the conjecture is based on history, because first of all, nobody's going to readily take the Chinese currency yet as a reserve currency. I mean, relative to how much trade it does in the world, the role of the yuan as a reserve currency is certainly de minimis. But if they went to, let's say, and historically it would make perfect sense and would be a great irony on the world, if a digital backed currency was backed by silver, especially, it would undo a lot of the terrible fallout from the opium wars, of course. And we know that China doesn't let go of that view of how it was treated under Western colonialism. So, I'd look for something like that to happen. Do I know when? Absolutely not. But it would certainly make perfect sense because people are going to be mistrusting of a Chinese currency at first. So, how do you entice them? Is my only point. And I look for that to happen. There's certainly some movement now in the metals market. It's not just today, but they've been holding up pretty well. Now, is that a reflection of continued QE and therefore global weak interest rates? Yes, of course, but we've known that for quite a while. But the metals are actually performing pretty well, the precious metals, even in the face of record highs in the equity markets. So there are many things afoot here. And I think a lot of them do stem from what the warmongering that Dr. Faber speaks about. Because you know what, I don't know who they're playing to. I think it's a bad decision. I think Australia has to be very careful here too. So I stop there.
Dr. Faber, in regard to Taiwan, do you see any potential for geopolitical risks on the semiconductor industry in Taiwan?
I don't think that China will go to war over Taiwan. I think it's kind of rattling between politicians, and it's made out to be a big issue when actually the businessman neither in China nor in Taiwan wants to have any confrontation. The two economies are very closely linked already. So I'm not so concerned about that. I'm more concerned about maybe some geopolitical issues coming up somewhere else, or there might be a false flag at some point and so forth. But there's one point I want to make, and this is, people have turned very negative towards Asians. I'm not necessarily saying because of Trump, but certainly his anti-Chinese rhetoric has not been favorable for Asians in America. And I think what Ira said before, in the minds of the Chinese, the humiliation that occurred in the 19th century and early part of the 20th century by Western powers. I mean, just watch once again this movie. It's not particularly good movie, and it's biased and anti-Chinese to a large extent. It's called 55 Days in Beijing. It's the rebellion of the boxers against the regime, but especially against the foreign powers that had kind of taken control of China, including, to my surprise, the US had a big presence in China at the time. For what, you really don't know, but essentially it shows me that the US pursued already early on an expansionary policy in Asia, and not a policy of containment, but of expansion and imperialism. But anyway, I think with this in their memory, and of course repeatedly being taught at schools, no foreign power, that I can say with some high degree of confidence, no foreign power will ever again push around China. It is not going to happen. And maybe, people say, oh, Putin and Xi Jinping are evil leaders, and dictatorial leaders. Yeah, maybe, but they are relatively, I have to say, relatively moderates. So I think the West would do well to be very careful how far they want to push China, because unlike Mr. Trump and every economist said 2 years ago, the trade war is very negative for China and it's very good for America. The opposite is probably true. Like the embargo against Russia is completely useless. It doesn't help anyone. There's so much smuggling in the world, and so many people make so much money out of smuggling, including all kinds of small nations, that it will continue to flourish. And that embargoes nowadays, with all these porous borders, are just ineffective. So my sense is that for the time being, we can avoid war, but who knows, when the economy in the US deteriorates badly, maybe it will become more of an issue to rally the country again, or to keep people under control, or impose further restrictions on their freedom. Who knows? But I would say another thing about your remarks about commodity prices and stockpiling. I think we can all agree that it is a fact that the quantity of paper money in the world, not just in the US, but elsewhere, has increased dramatically as a result of money printing, that is, the expansion of the balance sheets of the central banks. So it is like in the 16th century, the increase in the supply of gold in Europe led to the price revolution of the 16th century, where the price level more or less doubled in Europe. And after the end of the 16th century, there was the period of mild deflation. In other words, prices didn't go up anymore. In some cases, they went down somewhat and so forth. But the price level, and this I want to emphasize about today's situation, the price level never went back to the level it had been before the 16th century, when the gold shipments started to arrive from the New World. And I think all the money that was printed has lifted, say, the price of, as Ira said, of soybeans and corns and wheat and sugar and coffee, and in particular in the last 6 months of lumber and so forth, and of cryptocurrencies. These prices will not go back to the level they were before. They may drop somewhat, or maybe in some cases where the prices have moved spectacularly, like lumber, maybe they could fall 50%. They're not going back to the level they were in 2018. So I think the money printing, and when the Fed says, oh, it's transitory, yeah, maybe the rate of price increase is transitory, but the price increase will not go away. That's what I want to say. The level of prices in the world has gone up a lot, and a lot more than wages. So the economy for the ordinary man will not be very favorable. And we have statistics about this, that young people with 35 years have less money in terms of assets than their parents, and earn less in real terms.
Very interesting. And your thoughts, Ira?
Oh, so much of that I stone cold agree with. And then, it gets into some, glad Dr. Faber brought that up, because, I wrote that piece the other day that sanctions are sanctimonious. In the United States, with its knee-jerk response all the time, sanction. And it's because, as Dr. Faber rightly points out, the ability to bring goods in regardless So it doesn't really do you any good. And as I pointed out, when having just finished reading the biography of Deng Xiaoping written by Ezra Vogel, and Deng Xiaoping said in 1989, after Tiananmen Square, when the world was busy placing sanctions upon China, that the outcome of it was it actually raised the level of the Chinese Communist Party, because you had a phenomenal increase in the sense of nationalism as China viewed the world as ganging up on them for what they believed, whether we in the West want to accept it or not, was a necessary political response to change that the Communist Party wasn't willing to entertain. And China, and pay attention, because it's exactly what China is now voicing under Xi, that the Uyghurs, Taiwan, and Hong Kong are internal issues. That's a buzzword for China, by the way, when they're sending a message to the world, when they view it as an internal issue. And now you hear talk about boycotting the Olympics in China, the Winter Olympics. I think it would be a horrendous mistake, regardless of what the world's NGOs are pushing for. China would then get its back up, and Xi, I think, following and thinking of Deng Xiaoping, would be elevated. It'd be a gigantic mistake. The sanctions don't work either. They don't work, and all it's doing is bringing Russia and China closer together in a way that hasn't been able to be done since the 1950s, when beginning in 1957, when you had the Great Schism. And of course, the brilliant CIA missed that whole thing, but of course, it wasn't in the best interest of the US military and industrial complex to see that schism. They needed to see a monolithic communist movement. So they spent years missing a lot of things, which cost the United States a phenomenal amount of blood and treasure. But that's the world in which we live in, and we have to be very, very careful. It's not as easy. There's no Manichaean black and white view of the world. The world is far more complicated than that. And if you think in black and white terms only, you're going to make a great amount of mistakes. I'll stop there.
And your thoughts, Dr. Faber, on that?
Well, Ira is 100% right. I mean, I agree that colossal policy mistakes were undertaken. It's like a few years ago, I think in 2014, 2015, some of the American hawks, one of them being this brilliant Victoria Nuland, they became very arrogant and they wanted to include Ukraine into NATO, which wasn't acceptable to Russia. And Russia then reacted to it, which was normal, because we have countries and we have spheres of influence. So say for the US, a sphere of influence definitely is Canada and Mexico and the Caribbean and Western Europe, because they have all these American military bases in Western Europe. But for Russia, the sphere of influence is Georgia, Central Asia, it is Ukraine, Belarus, and parts of Eastern Europe. They don't want to have America too close to their borders. And in the case of China, what disturbs the Chinese very much in the long run is the widespread American presence in Southeast Asia, where they have military bases and naval bases all over the place. And so the Chinese, when it comes to the stockpiling, the Achilles heel of China is really the Strait of Malacca, where the American Navy could easily block the supplies to China of raw materials. And therefore, the Chinese are very, sensitive about their sphere of influence. And the sphere of influence includes Taiwan and includes parts of Southeast Asia, in particular, say Myanmar, where now there are some problems And the demonstrations in Myanmar have a lot of commonality with the demonstrations in Hong Kong. In other words, one smells some American influence in these demonstrations. And that is, of course, not acceptable to the Chinese. The Chinese actually, also in the case of Hong Kong, their reaction was extremely benign. And also recently, they have convicted some Hong Kong lawmakers and some Hong Kong personalities to prison terms for soliciting the demonstrations and for encouraging, and also for encouraging burning down the Chinese government's building in Hong Kong. Now you have to visualize, in America, they make a big story if some people storm Capitol Hill. But in China, they burned down the Chinese office, government office. And the Chinese reacted very calmly. They have now tightened the security laws, and then everybody, all the foreigners and the journalists, you have to distinguish. The journalists are, of course, looking at the world from a different perspective than we businessmen or say people that look at the whole world. The journalists are always biased. They're always against China. They're always in favor of human rights, except when it comes to people like Assange, Julian Assange, and Eric Snowden. For them, human rights are different because these are different cases. So, you know, there's always exceptions. Human rights are applied when it's convenient, and when it's inconvenient, human rights are not applied. When it comes to drones that kill innocent people, human rights do not matter because they are for the purpose of national security and. So I think the Chinese are looked upon too negatively, and I hope that the Western world will not threaten China, but try to engage through diplomacy into solutions that are beneficial for both parties.
And Dr. Faber, on your thoughts for major central bank monetary policies, do you see more yield curve control and allowing inflation to reduce the burden of government debt?
I think the Fed and other central banks are not concerned about, say, consumer price inflation for the time being. They will say, well, it's transitory or it's temporary, and we have to get the economy going again. And then once the economy is strong again, we can then tighten and so forth. I don't think they will ever tighten again unless they are really forced by the market forces. But in general, I think the policies of the Federal Reserve and other central banks have been very destructive. They have really distorted the pricing mechanism. I mean, just think that 10 years Portuguese bonds and Spanish bonds have a lower yield than US treasuries. I mean, maybe the US treasury market shouldn't have a AAA rating. Maybe they should be triple B minus or triple C. This, I don't know, but I can't imagine that the credit risk in the US is higher than in, say, Portugal. So the market has been distorted. The central banks, of course, always argue, well, we are here to stabilize markets. Well, actually, this is not a function of a central bank to stabilize markets, and certainly not to manipulate market, because as you know, Ira, there's a very fine line between intervening into a market or hedging and speculation and manipulation. So I think the central banks have clearly engaged in manipulation and not just in stabilizing.
And your thoughts, Ira?
Well, yes, and it's a good thing to discuss this because I think this is where we have to go. So in the fact that they basically own the market because they won't allow the market to actually react in any sense of a market reacting. So that to me brings us to what we're eventually going to have to see, right? And we haven't begun on this yet, but we will, which is they're going to have to go to yield curve control because every time that Powell speaks at a press conference or other places, the market declares war on the long end of the curve because they start selling everything 10, 20s, and 30s because we know that only 20% of what the Fed buys is of that type of duration. Everything else is kept at a shorter duration. So the market goes and tries to attack the most vulnerable until we get, back to until the Fed then, of course, with its quote unquote QE program, does some buying and other entities and maybe the ECB, which then puts downward pressure on US rates because it's all tied together. The Japanese are actually quiet here. We don't hear much from them because first of all, there's not much to buy. So
yes. They own everything already.
Right. They own it. So they buy equities. So to me, the next big move up in the metals is going to come when the curve steepens out dramatically. And we've already heard Yellen nibbling on it. She backtracked pretty quickly. But so if that curve steepens, because it's the only place that the market can attack the vulnerability of the Fed, is to push long rates higher until they say, well, you know what, we're going to extend out our duration, which is they may not want to. It's interesting. The only one who wants to talk, there's two people at the Fed who want to talk about yield curve control, and that's Richard Clarida and, of course, Lael Brainerd. And I thought that Lael Brainerd actually with the Biden administration would wind up being Fed chair because she has written pretty extensively on yield curve control. And with Yellen at the Treasury, they need it. This is back to the 1940s in that regard. I don't see any way around it because when you own the market, meaning the Fed and the central banks own the bond market, it's not a market in any sense. It's about as much as a market as the Soviet Union was in the 60s and 70s, except for the black market. But we have all these issues that are going to have to be dealt with. But I think that Powell back in 2020, in April, May, June, July, when he was searching for a way to weaken the dollar and ease some of the upward pressure on the dollar because it was wreaking havoc on the emerging market currencies who had such a huge amount of debt payable in dollars, so they wanted a weaker dollar. They were talking about yield curve control, and then lo and behold comes Jackson Hole in August, and there is not a peep about yield curve control because I think it actually scared them a little bit because if you went to it, I think it would unleash some very powerful forces that they may not, as of yet, be in favor of. So there are many, many things, but that's a critical area to me. There'd be nothing I'd like to see more, and this is pure conjecture, than Jerome Powell resign. I thought he should have resigned in January in a very gentlemanly fashion and said to the president, Mr. President, there's a lot of work to be done here. You may want to have your own Fed chair. It could be me, but I think you should make the decision to choose your own Fed chair. Because I'm one who believes that Jerome Powell, I wanted to like him. I thought when he started down that path of shrinking the balance sheet was a good thing, but of course he had to go and do both at the same time, not understanding what the ramifications were, meaning raising the Fed funds rate as well as shrinking the balance sheet, which he couldn't pivot away from fast enough after the disastrous asset price movements in the fourth quarter of 2018. I think Jerome Powell is in way over his head. He really shocked me last week. When he raised the issue that he was surprised by the fallout from Archegos, that there were so many similar positions. Well, anybody who really understands the way the prime broker game works understands that it's all herding and tail coding of positions. So to say you were surprised by it really reflected that for somebody who came out of Carlyle Group, you really don't understand the way that leverage works in the shadow banking business and in the non-shadow banking, the prime broker, in which the banks allow so many hedge funds and aggressive players to leverage up their balance sheets in whatever way that they can. They get paid many ways. They get paid by, of course, for the use of credit. They get paid for the execution of trades. And the best of all, they get a first look at who are the really good traders, and then they just tail code them. This has been going, this week is my 44th anniversary as a trader. And this is one of the first things I learned about Wall Street when I started going there in 77, 78, and 79. This has been going on. Jerome Powell doesn't understand this. He's surprised by it, by the commonality of positions. Shocked. It's time for him to go. And nothing would, I think the markets would then get some clarity, because then you would get, listen, there's no question that the Fed and the US Treasury, especially with Yellen as the Secretary of Treasury, are so tight at the hip. But I think the yield curve control will be the last piece of the puzzle, and then we'll have more clarity on how to trade this. And then, you know, in following Dr. Faber, the Chinese are so interesting. You know, while the world is busy bashing the Chinese over the Uyghurs, I still raise the issue. The U.S. is trying to find some type of relationship with Iran, but meanwhile, China and Iran just signed a 25-year strategic agreement and huge trade increase, I think, over the next 25 years, growing their trade to 600 billion. So, and yet the US is pursuing Iran while they're bashing the Chinese over the Uyghurs. Well, the Iranians want to always portray themselves as the global protector of all things Islamic. And here they are growing closer and closer to the Chinese. So there's so many things that are, again, existing in the gray world that we have to pay far more attention to than the world of black and white that the crisis mongers want to portray. The world is much more complicated.
Yes, I think you raised an important issue. I mean, I don't know when you started to work on Wall Street. I started in 1970, so it reveals something about my age. But what I wanted to say is that at the time, the world was far less complex because we had a superpower that was essentially the US. And then China wasn't a game player yet. In 1970, they consumed 2% of all commodities produced in the world. Today, it's more like 50%. So they were not a factor. And then we had the Soviet Union. But the Soviet Union, contrary to the warmongers, was in no position to take on anyone because their weapons industry was antiquated. They were not competitive. And the people, the country was very poor, say, compared to the US. So the US had very few competitors and was the industrial superpower. It was the monetary superpower and the leader of the free world. I don't think that anyone today would consider the US to be the leader of the free world anymore. And I think when we look at economic statistics in the world, international statistics, whereas the US was the dominant economy in 1950, 1960, 1970, by the late 60s, new countries came up like Japan and eroded the economic prowess of the US, first in motorcycles and then in cars and appliances and so forth. And then came the opening of Taiwan, South Korea, Singapore, and other countries, and then China and India. And so the US is, and that many of these warmongers and of the politicians, the hawks, this is something they don't realize. The US has to now treat other countries equally and not as a superior power, as the champion of human rights and so forth. And that is a new environment. And historically, this new environment has not been resolved very peacefully. But there's one thing I want to say about investments, because that is frequently overlooked in all the issues that are prevailing in the world. I think over the last 3 months, we had a distinctive change in the leadership of equities. So I have sympathy for people who say, oh, this is a bull market that will last for many years, because if you take the counting as, say, February, March, you drop 30% in the S&P in the US. It was not a perfect bear market, but in terms of magnitude, it was sufficient of a bear market to create an unusual low buying opportunity, certainly in some sectors like oil and resource stocks. And since then, we had a big move, but the big move came principally, as we know, from the FANG and FANG-related stocks, Facebook, Amazon, Apple, Netflix, Google, and in the FANG index on the New York Stock Exchange, Tesla is also included. So these stocks performed very well and drove the S&P higher, and it led to an outperformance, a further outperformance of the US vis-a-vis Europe, vis-a-vis Australia, vis-a-vis Southeast Asia and emerging markets. But this has now changed, and I think it's premature to say that value stocks are outperforming growth stocks, but they perform as well. And in some cases, they have begun to outperform. Say, financial stocks have been very strong over the last 3 months. Oil stocks have been very strong. There'll be setbacks and so forth, but I think some of these groups have bottomed out the way some of these stocks, the value stocks, bottomed out in 2002, 2003, whereas the dot-com boom stocks had peaked out in March 2000, were still languishing and still in bear markets. This value segment of the market, including commodities, started to move up. I think we may be at a similar junction, and that's where I would park money for the portion of the money that is in equities. And as I said, I think precious metals, as a result of this price revolution of the 21st century, induced by the policies of central banks that printed money out of nothing, that these assets such as gold, silver, platinum, and some cryptocurrencies, a lot of them are probably going to be like a fraud. But tell me which paper money is not fraud. Everything is a fraud in the financial markets. So I think that investors should focus on sectors of the market, whether it's in real estate or in commodities or in precious metals. Precious metals are not in a bubble. There's no interest in precious metals to speak of, or much less interest than in speculating in GameStop and in other Reddit touted stocks and in ARC in investments and so forth. So I think the good thing about this bull market is that it's left a lot of groups behind, And they are now coming into focus and offer some opportunities for value investors and for active managers.
Great. And your thoughts, Ira, on the investment opportunities?
Well, again, you have to say it because unfortunately in this business, it's the way we operate. Last year, the last podcast we did, yeah, I remember that with Dr. Faber, what did we talk about? Bungie? You loved Bungie, right? And that was at, I think, about $41, $42. It's at 90 as we speak. Archer Daniel, Freeport. So we loved all these. Now everybody else is finding their way to them, as you saw early this week when the NASDAQ was getting, on the day of Janet Yellen speaking with a forked tongue. One minute she says one thing, and then in a minute she's backtracking it when she sees some damage done that, again, you didn't understand me, or I didn't really mean what I said. But the Dow still managed to close higher as people came looking for these value stocks, and they've been good value stocks. And we talked about it last year that Freeport had a dividend, even when they were struggling, still had a dividend that was coverable. We talked about Glencore. So everything that we talked about has doubled, tripled, or quadrupled in that time. And now more people are coming to them, even though I think the commodity cycle is really just warming up, especially relative to the equity cycle, because you do have a world awash with money. And if the growth numbers actually get realized, I think it'll be very important. And nothing says it more to me than what's going on in the grain market. Because again, you have rapidly rising grain prices, even with massive harvests. So that is what people should really pay attention to. I think high quality value companies, of course, Dr. Faber knows far better than I do, but I'm sure you would agree that mining companies and agriculture companies, just like telecoms, when they get too much money, they do some very stupid things.
Not only companies do stupid things when they get too much money.
Too much money.
Also governments.
Yeah, because it's the same type of bureaucracy. Oh, we got all this money, and they start pursuing things, which, no, you know what? It's like Tobin's Q. Do you buy or build? Well, when prices of equities are very low and it makes sense, and you can buy a company far cheaper than you can build it, it makes sense to buy it. Why are you rushing to buy a company when stock prices are elevated? Yes, I know your paper is elevated too, maybe, but not to the quite degree. I know that one of my favorite people, Chris Whalen, raised the issue of New York Community Bank purchasing big mortgage people and paying a lot more for it than their company was worth. So you got to be very careful in these environments. But I agree with Dr. First of all, Asia and probably Europe now, because Europe has been a laggard and we're starting to see some movement in the DAX. Europe has to straighten out certain things. In fact, I don't tout things, but when I do analysis, I'm looking at the banking sector in Europe, and I've hated the European banks outside of UBS, but I don't count UBS as a European bank. It has one of my favorite people at the Axel Weber at the helm, so I've been acquiring it. I think Dr. Faber and I talked about it last year because their footprint in Asia is growing in wealth management. They got hurt a little bit in Archegos, which kind of surprised me. But I am looking at the European financials because I look at a company like Commerzbank, which has been, it should have died with swine flu because it's been such a pig. But so was Deutsche Bank. But I think you're starting to see some things develop there, although it's hard to make money as a bank. But Commerzbank is interesting to me because I see how much of it is owned by the private equity group Cerebris, and that they just laid off all these people, unfortunately. But that's what private equity groups do when they're trying to spin off, when they're trying to sell a company or bring it public. So, and there's something else going on in Europe, that the ECB announced that they were going to a broker-dealer system, which they've never had. It's going to mirror the way the financial system works in the US. And in order to be a broker dealer, you have to be domiciled as your headquarters in the EU. Well, to me, that raises the value of a lot of very long dormant European banks. And nothing is more so than Commerce, even though they don't pay a dividend. But if I read my private equity people right, as soon as they get the layoffs done and they start making money, a dividend will come back. So I'm looking at things those around the world, but I think Asia is a phenomenal story. I'm not, I going back to the crisis mongering, warmongering, I'm not looking for that because I think people know that Taiwan is truly a red line point and you don't want to cross it. I don't even understand why you'd want to beat the drums. Just let it exist as it exists. And the Chinese, which view it as an internal matter, they'll come to resolution of it. Again, as long as the Iranians are so busy courting the Chinese, and as some person accurately said, when Pompeo threw out the term they're committing genocide, somebody else said it's cultural genocide. Well, there's a vast difference between the two. But again, there's many tripwires you have to be very careful of. But barring those, I think that the opportunities are great in Asia. And I dare say, and I've not been a fan of Europe because Europe has such problems. And now that Merkel is done and maybe the Greens may win a majority in Germany, which would really become interesting. Macron is in trouble in France, but there's so much money sloshing around Europe right now that I think there'll be some opportunities.
Oh, wow. Yeah, I remember well the discussion we had about food companies a year ago. And it's interesting that you just mentioned Bunge. First of all, I still own the shares, although I'm not really recommending it at this level. But it was interesting at the time, following our discussion, a reader of mine, he sent me an email, he said he didn't see any value at all in Bunge because food prices were so low. And I always say, you have to have a few people telling you that they don't see any value, which then confirms that there is value. Because if everybody can see that there is value, the stock is no longer a value stock, you understand? Then it has already become a popular stock. But at the time, it is true that the outlook for agricultural commodities was not particularly good. But this is the point of investing. You have to buy things when the outlook is unfavorable, and you have to sell them when there is a lot of hot air, when the outlook becomes obvious to anyone. And this is the danger point. And on that, I will apologize because I have to go. I also need to do some other work.
Yes, thank you very much.
And make some money for us.
Well, let me just end with the really prescient words of Louis Gavet, which is, my clients don't pay me to forecast, they pay me to adapt. So I think everything that Dr. Faber talks about is the ability to adapt to the changing environment.
Great. Thank you so much, gentlemen. Thank you so much, Dr. Faber and Ira.
You're welcome.
Thank you. Thank you.
Pleasure.
Be well, Dr. Faber.
And stay well, Ira.
Stay well. And I look forward to more of these. Really enjoy them immensely.
Okay, great. Thanks a lot.
Yeah.
Okay,
and,
thank you.
Yeah.
All the best to your viewers.
Yeah. And same to you. Thank you.
Thank you so much. Take care. Yeah. Bye-bye.
The FRA Roundtable Insight Show is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.